Hello, chart watchers, and welcome to the final bar. My name is Erin Swenlin from DecisionPoint.com, and I'm filling in for Dave Keller today. I'm happy to be doing so. It'll run pretty much like the show normally does. We're going to talk about wrapping up the week. I've got some charts to show you of stocks that I think look good. We'll talk a little bit about the sector summary and the summary of the broad markets. I do have to say that because we are recording this right after the market close, I don't have most of my decision point indicators up to date. So we're just going to go through with what we have. Upcoming schedule, we do have we had a market outlook with Martin Pring and Bruce Fraser that aired on January 13th yesterday, but you can find that on the StockCharts TV app and on YouTube. Next week, we have Charting Forward 2022. We have some excellent folks like Tony Dwyer, Gina Martin Adams, and my friend Linda Ratschke are also going to be doing some of these segments in the Charting Forward. Do want to remind you, I just found out today that I have a 3-day weekend. The market is closed on Monday, so there won't be a show on Monday. And then on the 18th, on Tuesday, we have Andrew Thrasher on the final bar with Dave Keller. All right, so let's get on with it and talk a little bit about what's going on in the market. Really interesting trading day. The NASDAQ was down and now it's finished up. The S&P 500 was down and now it is finished up for the day. So we are finishing the week on a little bit of a high note. It was a little bit rough. Let's go ahead. I want to show you what the SPY in general has done this week. This is a 5-minute candlestick chart, and it gives you an idea of what the trading was this week. And you can see that we came in on these lows back on Monday, managed to rally for 2 days up to the top, had a day of digesting the move, and then it started back down. We did find some support here, which is matching up with that support level that we saw on Monday at this top and this low. And then we bounced off that, but now we're hitting more overhead resistance, and we'll have to see if this rally can continue. We did see a lot of volume come in that last 5 minutes to the downside, so it'll be interesting to see how this shapes up. Let's go back and look at the sector summary. And as you can see for the day, anyway, energy is taking the lead. Technology actually came back from the dead a little bit today. We've seen yesterday it was down over 2.5% XLK. So we're seeing a little bit of a move back into some of those growth areas. XLC, same thing. We got a bit of a move to the upside there. But I have to say I'm not liking the sector charts very well. I'll go through some of those so you can see. Consumer staples still looking okay. Let's go ahead and look for the week though, but you can see financials surprisingly had a rough day. Earnings are being reported now for a lot of these banks and they're hit and miss. And so we saw JP Morgan down by over 5% on the open, and more than likely some of those other bank stocks, I haven't looked at them, but I would expect to see some of that, some of those stocks also seeing some headwinds. Despite rising rates, which generally tend to help those financial stocks when we see those rising rates. So we'll see how this all shakes out, but let's look at for the week how they finished. And energy certainly is the sector to be in. It has been. You can see a nice StockCharts technical rank above 99. And on the week, energy was up over 5%. The only one that was in positive territory for the week besides energy was the comm services sector. Again, this is a sector that's been beat down for quite a bit, but seeing a little bit of rotation moving back in there. And as I noted, technology and healthcare, we're starting to see a little bit of that. Let's really look quickly though. I want to show you the RRG. This is the longer term weekly RRG, and it gives us a sense of where all of our sectors are going. Are they leading in the quadrant, or are they coming toward leading? And if they're lagging, in the case of XLC, we've seen it lagging, and you can see that it is turning northward, might be starting to enter that improving sector. In the long term XLF, you can see making that hook around. But what I like to look at daily in my decision point alert is the daily RRG. And it's a much different picture. It is rather noisy because it is short term, but I think it really gives us an excellent look at where that rotation currently is. It switches around a lot during the week, but this week it's been pretty steady as far as XLE, XLI, and XLF really taking center stage in that leading quadrant. XLP has rejoined the leading quadrant out of weakening, which is usually a good sign. Materials headed south toward weakening, so that's a little bit of a concern moving forward. XLU, interestingly, is moving toward lagging, and you have XLV and XLRE, which are both defensive areas of the market in healthcare and real estate, but they are starting to see some downside pressure as well. XLY looked like it was going to move into that leading category, but it is traveling in a southward direction. Looks like it's going to choose to move into lagging of the three that it was heading towards. So right now, energy, financials, and industrials, materials, consumer staples are kind of those sectors to watch going into next week, just based on where they are on this RRG. But I have to say, when I look at a candle glance of those sectors, which I can do back here. So I'm just going to go to the sector candle glance. You'll note that the candle glance probably looks different than what Dave will show on his candle glances. This is the DecisionPoint candle glance style. If anybody's interested in getting that, just send me an email, Erin@decisionpoint.com, and I will get you that chart style. As you can see, it is a 6-month chart with the PMO, my price momentum oscillator, on the bottom, which measures momentum, very, very similar to the MACD and the PPO. But we developed this at DecisionPoint, so we kind of like it better. All right, so when we look at this sector candle glance, and I looked at it this morning in my subscriber-only Diamond Mine trading room. It's available to my DP Diamond subscribers, where I give 10 stock picks per week, if not more, that we look at. And then on Friday, I go over those picks and we see which ones did well, which ones did not, and determine why. And we were looking at the sector list because I always, at the end of my Diamond Mine trading room, I always go in and we look at the sector candle glance, and then we go in and look under the hood, is what I call it. We have under the hood indicators for the sectors that are also available to our subscribers. But just getting a sense of everything, when you look at this chart, this morning, I was kind of hands in the air going, well, where is the positive momentum here? Where should we be looking as we go into fishing into next week for stocks? And really, as you note, momentum is down on almost all of these sectors, including staples, which just had a negative crossover for the PMO. That's a PMO sell signal. And the only two sectors really with positive momentum right now is XLI. We have also XLE and the financials, but you can see with today's very big decline of over 1%, that momentum is already trying to shift to the downside. So when I look at this, I would have to say that the sectors that I would be really interested in moving into next week are going to be XLI, XLE. And we'll go and look under the hood. Like I said, I don't have all of those indicators under the hood ready, but we will see what they were yesterday, and it should give you a good idea of what we're looking at. All right, so let's start with XLE, and we're going to look at that under the surface on the sector chart list. Again, this chart list is available to our subscribers on the website. Whether you subscribe to the DP Alert or DP Diamond, you have access to this. We annotate them pretty much daily. So Carl gets in there, Carl Swenlin, who's president of DecisionPoint, my father. He annotates these and looks at them every day. So on our website, you will see these annotations updated. So under the hood, what are we talking about under the hood? Let's get to XLI and we'll start talking under the hood. So of course, RSI, PMO, on balance volume, but what you'll see are these under the hood participation indicators, including I use relative strength, so you can look at that, and then stochastics for a short-term oscillator to give you a sense of what's going on. So what I really concentrate on are our Silver Cross Index and the Golden Cross Index. The Silver Cross I'll talk about in a moment. Everybody seems to be familiar with what a Golden Cross is, and that is a 50-day moving average positive crossover, the 200-day moving average. We use EMAs at DecisionPoint, so this tells me in XLI how many stocks have a 50-day moving average above the 200. It's a really great index. It kind of gives you that sense of the foundation, again, under the hood, what's actually going on under that surface. And you can see currently 76% do have golden crosses, which is definitely a good thing when you're looking at these indexes. You want to see them at 70% or above. So we have a bullish reading for that golden cross. Silver cross. So a silver cross is a 20-50-day EMA positive crossover. So this tells us how many stocks within XLI have a 20-day EMA above the 50-day EMA. And currently that's at about 71%. So what I like to do is go through and look for the bias on these sector charts. Which way is the wind blowing? And the way I can tell that is by looking at the participation of stocks above their 20, their 50, and their 200. I compare those percentages to the Silver Cross and the percent above their 200-day to the Golden Cross. If these percentages are higher than the Silver Cross or Golden Cross, that gives you a bullish bias in that particular sector. Right now, we don't actually have a bullish bias in the short term because both of these percentages of stocks above their 20 and 50-day EMAs is lower than the Silver Cross Index, and that gives us a slight bearish bias. And the reason being is that you can't get a positive 20, 50-day EMA crossover unless price is above both the 20 and 50-day EMAs. EMAs are great. The minute price moves above them, the EMA will start moving toward it. If it moves below, the EMA will start moving toward price, no matter what, every day. So we really like using those EMAs. They give us that really a great sense of what's going on near term. A simple moving average waits all of that time before the same, whereas EMAs put more emphasis on near-term data, which is why we like to use them at DecisionPoint. So XLI, we don't have the updated participation numbers, but I suspect given the move that we had today to the downside that we're probably going to see these participation numbers stay about the same, possibly tip over. So that leaves me a little bit nervous about the industrials moving into next week, but overall you can see relative strength wise, they're still really holding up. Stochastics tell us in the short term, we might have some problems, and you can see the price did dip down right there, tested this area of support, and it did bounce up before the close. So we'll have to see what these participation numbers look like as we move forward. All right, the other two I wanted to look at were staples, because this has been a pretty nice area. Yes, we did get that PMO sell signal, but notice under the surface, we can see a very high Silver Cross Index of 97%, 78% on that Golden Cross Index. So we still have stocks that are really configured in a bull market. When that 20 is above the 50, we consider those stocks generally in a bull market configuration. But you can see that participation is slightly lower, so the bias in the short term is a little bit on the bearish side for XLP. The one that we know is really outperforming, and I suspect will continue to outperform next week, is energy. Look under the hood here and see how strong this sector is under the surface. Not only do we have price momentum oscillator moving higher, not overbought, because we've seen it at higher readings, so we know it can move even higher than this. RSI is overbought, but then you can look back and see that we had overbought readings in this case for 13 trading days before we saw any issue. And honestly, when it came out, it was just because it was digesting that previous rally. So I would be looking for something similar with industrials. But look under the hood here. We have 100% of stocks with 20, 50-day positive configurations, silver crosses, and 100% with golden crosses. That tells you that all of these stocks within this sector have an excellent bullish bias. And, you know, really, I can't see anything not good about the energy chart right now, this energy sector chart as far as participation. Now I'm going to dip right into technology briefly, and then I did have some questions, mailbag questions, that I'll talk to you about. But technology has certainly been an area that has gotten hit hard from this top down to the bottom here, lost about 9% for XLK. Currently, it is trying to make its way back up, and that would require to test overhead resistance about a 7% move to the upside. So we'll be watching technology, but looking under the hood, momentum still has not shifted positive. Notice my Silver Cross index is still trending lower. We have 78% on golden crosses. So that's still a bullish number for the long term. But you can see that that is seeing cracks because only 66% have price above their 200-day EMA. And that is going to be required to have it both above the 50 and 200 in order to get more of these golden crosses. So underneath the surface, not looking so good. However, I would note that these participation numbers are in near-term oversold territory. I'm going to be interested to see what these numbers come up to once they update. All right, next up is mailbag. And I got a question in the Diamond Mine trading room I did with my subscribers this morning. And they were asking about the VIX because I invert my VIX. And the reason I invert my VIX is because I like to see oversold readings on the bottom and overbought readings on the top. The Bollinger Bands are inverted as well. So the whole thing, that whole window is inverted. And the question was, how do I get that to happen? How can I invert my indicators or even price? And it's a real simple answer. You just put a dash in front of it, a minus sign, if you will, and that is going to flip it. So for example, if we take, let's take Ford, if we wanted to see price inverted, you could just put a little minus sign in front of it and boom, your scale is reversed. I think I remember Dave talking about if you really like a stock on an inverted setup, then you know it's a bearish setup. Something I remember him looking at. All right, so that was one of the questions. The other one was about divergences, because I often talk about the OBV and OBV divergences. So let's go ahead, we'll look at Tesla, since everybody's always looking at that. So we're talking divergences. I think it's pretty obvious when you see the indicator obviously has declining tops on price, that's a confirmation. If you're seeing declining tops on price, but you start to see a move to the upside on the indicator, then you're looking at more of a positive divergence. In this case, price bottoms falling, OBV bottoms rising. That is a positive divergence. But one of the things that I often talk about are reverse divergences. Let's see if I can find a good one on here. No, let's look at, I should have had one all the way ready. I apologize. Let's look at Mosaic. All right, here's a great example. All right, so reverse divergences are when you start to see that OBV moving above the prior top, but price is not doing the same thing. So actually, this isn't the best example. We can look at XLK again. There we go. So in this case, you can see that price was getting above the prior top, and you want to see the same thing going on with the OBV. A lot of times what you'll see is the OBV starts to make these new highs, and price is on a rally, but it's not making new highs. So that is what we call a reverse divergence. And the reason it's a bad thing is because you're getting all of that volume during a rally, but it is unable to push it past the prior price top. So that's something we just don't really want to see. All right, so those were two of the questions. I'm going to move right on into the next segment, and it is the 3 and 3. So I'm going to show you 3 stocks that actually I put together for my diamond subscribers. These were DecisionPoint diamonds during this week. I do 10 stock picks or more per week for my diamond subscribers. And so you're going to look at 3 of them that I presented this week. The first one I'm going to show you is natural gas. And natural gas, I didn't bring it to my subscribers, unfortunately, until the second day of confirmation of the breakout. But I kind of did that on purpose too, because I did get confirmation on that breakout before I presented it. But we were looking at this trading range for natural gas, really nice breakout. Then we had a huge gap up on it. And the last 2 days, unfortunately, it's taken back all those gains that we did gain on it earlier in the week. But I still like the natural gas chart. And why do I still like it? Despite this big pullback that took back all of the gains from on Tuesday, Wednesday, Friday, Thursday, Wednesday. So it took back all of those gains. But with that big, deep decline, we still see a positive RSI. We still see a PMO rising. Stochastics, a much more short-term indicator, very sensitive, certainly confirming the current downtrend. But when I look at this chart, I still think that there is upside potential here for natural gas. We have sort of a saucer cup shape, and this is forming the handle. So I think that this is just a natural pullback after a very strong breakout. And I still see some positive, a lot of positive bullish details on the chart, as I pointed out. So I still like natural gas. Like I said, I presented it maybe a day late, but it doesn't really matter because we did end up with the pullback, and it is below that 50 and 200-day EMA. Something I don't like, but again, the key indicator for me is my PMO. It is still pointed upward, and the RSI tells us that it's still in the top half of its 2-week range. That's good enough for me. The other chart I'm going to look at here is Teekay Corp. One of the themes that I found, I run scans before I present my diamonds, and I look at those scans and determine which ones look the best, and that's what I present. But I also notice and will tell my subscribers if I see a theme in my scan results. For example, lots of banks. For a while, it was just tons of bank stocks in my scan results. Another time it was home builders. This week it's been between gold miners, although they have faded this week. Gold miners was a theme. We've seen various other themes. The theme this week I've noticed is industrials starting to really poke through on those scan results. And in particular, marine transportation was starting to look interesting and coming up in my scan results. So I picked Teekay Corp for my diamond subscribers. This tells you where I selected it. I always put a stop level so that my subscribers can tell, I want to cover my butt, but I want to cover yours as well. So I always will put a stop level on my charts. You don't have to follow it. They do tend to be somewhat deep because I am skewed a lot of times toward the intermediate term. And with an intermediate term trade, I'm willing to give it a little more rope than I would give a short-term trade. But I like this one short-term, and I like this one moving into the intermediate term. Really nice saucer shape, breakout, continuing that breakout. Let's get an updated chart here. There we go. And I just, we're not going to hit overhead resistance until we get up here. And even from this current point, a move to that overhead resistance is about a 7% gain. So I think there's still something left here. And we looked at XLI, it still looks pretty healthy. That's kind of where I'm going to be concentrating next week, more than likely. But we'll see. My scan results always come up with something interesting. You just never know. So TK is one that I really liked this week and presented to my diamonds. I have the under the hood in terms of relative strength. I call it my relative strength studies. I compare the group to the SPY. I compare the symbol to the SPY, and I put the symbol to the industry group. In case you're wondering how to do that, you can do it just like this: dollar industry, colon, and you can use SPX. I use the SPY, dollar symbol to the SPY, and then dollar symbol to the dollar industry group. And that's how you can get that on all of your charts, so you can check that relative strength. All right, let's go to our third chart before we close everything off here. So this is Global Ship Lease. This was actually a reader request. During the week on Thursdays, I bring out the requests that I get via email, or those that came up in my free trading room on Monday that I think might be interesting to present as well. So GSL was a reader request this week, came in, looked really good. I had to present it as soon as I saw it. Again, let me update and make sure we have the closing chart here. There we go. And really beautiful breakout here above this area of overhead resistance. Nice flag formation. And based on that flag, your minimum upside target would take you right to overhead resistance here at $26. Really nice shaped chart. We have the positive RSI. And again, this was presented yesterday to my subscribers, so they would have had an opportunity to get some of that 3.8% rise. You can see that the PMO had gotten into positive territory. It's continuing to rise. There, right there in the thumbnail, you can see that silver cross of the 20 and 50. Stochastics looking great, still rising. I like to see them above 80 because typically when it's above 80 and they start oscillating, you're in the middle of a pretty good rally. So we're back above 80. Now we're going to watch and see if we can get that oscillation above that level. You've got relative strength looking great here. You've got the symbol looking great against the SPY. Everything's lined up pretty well on this chart, and this is in that transportation services. So it's still kind of leaning toward transportation, and that's pretty much what I'm starting to see. Well, I have about 25 seconds before we close out today. And I have to tell you a little about my website since I'm filling in for Dave, and you know all about him. DecisionPoint.com, we do two letters. The Decision Point Alert gives you all you want to know about the market, and diamonds I've talked about. That's where you can get your stock picks. So email me at Erin@DecisionPoint.com and I can help you out.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.